Hi class, a pleasant day to all of you. This is your Professor Dan, and in this video we are going to discuss inventory costing. So first, let us discuss what is inventory. In merchandising, the term inventory refers to the goods that were bought and to be sold to customers at a higher price without changing its form. In manufacturing, the term inventory refers to first, finished goods to be sold to customers. Second, the available raw materials to be used in production. And third, the units that are still in process. Okay, so in manufacturing, there are three forms of inventory. A company's inventory represents one of the most important assets because the sale of inventory represents the primary source of revenue of the company. Plus, let us take a look of the business operations of merchandising business. Merchandising business buys goods and sells goods without changing the form of the goods. Okay, so normally the account title used by merchandising business is merchandise inventory or simply inventory. In manufacturing business, manufacturing buys raw materials and hires labor and incurs other factory costs to convert the raw materials into finished product. There are three inventory accounts in manufacturing, as we have already discussed from the above. The first is raw materials and factory supplies. Second, the work in process inventory. And the third, the finished goods inventory. Let us illustrate more of these three types of inventory in manufacturing business. So here we are going to illustrate the three inventory accounts of manufacturing, and the business that we are going to use is for furniture business. In the company's warehouse, you can find those materials that are being used or that are not used yet or available are still available for use. And these are your direct materials or raw materials inventory. And in the production area or of the factory building, you can find items that are not yet completed but already started the process. And these are your inventory of work in process. So these items are not finished yet. And in the sales area, or if the company has a finished goods storage, you can find here the items that were not sold yet for the finished goods. And this is the inventory of finished goods. So these are the three inventory accounts of manufacturing business: the inventory for direct materials, the inventory for the work in process, and the inventory for the finished goods. Okay? And class, let us now discuss what is inventory costing. Inventory costing means an evaluation or determining the cost of inventory. Inventory costing allows companies to provide a monetary value for the items within their inventory. So basically, class, inventory costing is the assigning of values to your inventory. Since inventory is often the largest asset of the company, then proper measurements or evaluation of its value should be done with accuracy to ensure the fair presentation of financial statements. So the question is, how is the cost of inventory determined? So class, cost of inventory can be determined using the 5 steps. Step 1. Determine a specific time period in which you need to find the value of your inventory. Example, every year, 2 times as semi-annual or monthly. Okay, you have to determine a specific time period. Step 2, if you have determined the specific time period, then identify your beginning inventory. Step 3, add the cost of your inventory purchases over the period. For example, if you have determined the period is 1 year, then you have to determine the beginning of inventory for that year, and then you have to add all the purchases for the year. And step 4, take a physical count of the cost of inventory at the end of the period. So step 4 would mean counting, physical counting of what were left, okay? Physical counting on the warehouse with respect to direct materials or raw materials, physical counting at the factory building to determine what are the items that are not yet completed, and physical counting at the sales area or storage area to determine the number of units that were not sold yet. And lastly, calculate the cost of inventory with the following formula. So your cost of inventory will be beginning inventory plus inventory purchases minus ending inventory. That will give you your cost of inventory, either in the warehouse for the raw materials or in the production area or in the finished goods. So we will have the same formula for all of those areas. Okay? So, class, that's it for now. If you have questions, please let me know. Bye for now and have a great day.